You're sitting in a boardroom in downtown Chicago, 2003. The CFO holds up a year-old financial statement and asks, "Is this company really worth what it says?" The CEO leans in, eyes sharp. The tension is thick. How do these numbers translate into real value? Brigham's financial management doesn't just count dollars, it peels back the layers of time, risk, and strategy to answer that burning question. Before diving into balance sheets, Brigham pulls you into the concept that every dollar you have today isn't just a dollar, it's a time traveler with potential and risk. Understanding this flips how you see finance. In the book, we meet a small business owner in Boston named Sarah. She's offered $100 today or $110 in a year for a contract payment. The numbers tell one story, but Sarah's real question, which choice grows her business more? This decision is the heartbeat of financial management, knowing what a dollar today really means. Brigham uses a vivid analogy. Imagine you buy a coffee for $5. You can sip it now or freeze it, and it magically grows to $5.50 next week. That's interest, the essence of time value of money. Money's not static, it compounds like a seed turning into a tree. Waiting transforms small investments into big gains. The payoff, recognizing when to hold and when to spend, changes everything. Companies that mastered this started thinking in years, not days. Growth threw out impulsive spending for calculated patience, a shift that's surprisingly counterintuitive but enormously profitable. Now the numbers staring back at you from reports are cryptic, but Brigham makes these statements speak in plain English, showing you the story behind sheets of numbers. Take the fictional company Avalon Tech in Silicon Valley. Their balance sheet showed $10 million in assets, but behind that glossy number lay a recent risky acquisition. The book reveals how digging beneath the surface exposed looming debt, warning investors that appearances can be deceiving. Brigham breaks down the income statement by likening it to a theater play where revenues are the actors and expenses the stage crew. You see where the drama unfolds. Profits aren't just numbers, they're the story of how well a company controls costs and wins customers. Cash flow comes out of the shadows too. It's not just about profits but real cash moving in and out. Like water through a dam, managing cash flow prevented Avalon Tech from drying up, even when profits looked healthy on paper, an insight that saved them from collapse. Finally, the heart of Brigham's book. How do you put a real, tangible value on a company? Not just guesswork, but methodical valuation, where finance meets strategy and gut feel takes a seat. Remember Avalon Tech? Its acquisition pushed Goodwill up to $3 million suddenly. Brigham explains Goodwill as the company's invisible asset, the value of reputation, brand, and customer loyalty. But this asset is tricky. Recent accounting changes now demand sharper scrutiny because Goodwill can be a house of cards. Valuation isn't just plugging numbers. Brigham compares it to chess. Each move, from investment decisions to financing choices, affects the endgame. Understanding valuation lets leaders anticipate moves ahead, avoiding blunders and maximizing their company's market power. After the Enron and WorldCom scandals, Brigham dives into corporate governance. He shows how strong boards and oversight aren't about bureaucracy, they're the crucible where trust and value are forged. Without this discipline, even the best valuations crumble under scandal and mismanagement. Back in that Chicago boardroom, Sarah's choice wasn't just about cash, it was time, strategy, and trust wrapped up in numbers. Brigham's financial management arms you with the mindset to unlock these stories yourself. Try this. Next time you see financials or an investment offer, pause and ask, what story do these numbers really tell over time? Subscribe for more book summaries like this one.